What do I need to know to buy a home? How could Afterpay and my credit cards get in the way? And if I own a home, how can I buy another with the equity inside my existing home? Okay, welcome Fabio De Castro. Thanks for joining us from Oxygen Home Loans.
Thank you so much for having us. I really appreciate it.
Listen, you are cutting edge of knowing everything I'm going to ask you. So it really is, it's really like honestly my pleasure to be able to get this information to give out to our clients. And is what are the hurdles that the current buyers are seeing right now with these fast prices going up, evaluations and all that sort of stuff? What's going on?
Valuations are still not a massive issue because obviously the market is moving and it's quite competitive. So the valuation companies are still okay valuing things as the market dictates.
Someone comes to the market with their comfort level of their monthly payment or their mortgage price. They go to the market only to realize 2 months later that they are outpriced because they started too comfortable too soon. That's not going to sound good. It's going to make me sound salesy, like I'm trying to get to spend more. But this is what I'm seeing.
No, I agree. And I suppose a lot of times we have those conversations because I agree with you. Sometimes it makes us feel like we're trying to dictate that we want to grow more. And obviously, as a broker, we only really get remunerated for what they use. So even if I go and say, okay, let's get you a pre-approval for a purchase price of $1 million, okay? Obviously make sure your repayments, you're suddenly comfortable with it. We do a mix of fixed and variable to make sure you are comfortable with that. But let's try and get you $1 million, but with the aim of trying to buy something a little bit less. Because sometimes, you get someone that they get pre-approved for $950 and they're very, this is what I'm comfortable with. This, I can find something for $950, and then they go and see something that they could buy for $965, and then they got to start again. So forth.
Their earnings. Is this something like if you're a teacher, if you're a professor, great, you're a 9 to 5, you're sort of like you're open book. What about your photographers, your professional surfers, your sports people, anyone that's working from home? Is there something where you're like, by the way, you should absolutely do?
A lot of people don't understand certain things that really impact their ability to borrow, which is credit cards, car loans, Afterpay, Zip Pay. It's so easy to get those things today. It's so easy to go online and apply for a credit card, apply for a car loan, get an Afterpay account, and all those things really, come into play and affect your borrowing capacity.
So with Afterpay and those sort of things, what are you sort of saying? Are you saying don't use them for say 6 months prior to wanting to use the loan? Is there sort of a rule of thumb of like, hey, we look 6 months, we look 3? Is there like a little bit of a don't do this?
I suppose if you're getting close to buy something, I would keep those balances as 0. Okay, so an Afterpay account, essentially it's treated like a credit card. If you have any balances, if you close them off, or as opposed, not necessarily close them up, but if you have a 0 balance and you can prove to the lender that there's a 0 balance, a lot of banks will exclude that. So it's actually sometimes better.
Holding it.
Yes.
Holding an amount, holding a third. Sometimes, in the past they've said make sure you just hold a third because it can show that you can hold debt without getting into trouble. So you're saying
that's
0.
Yeah, those things are sort of different now. It's really about looking what your ability to borrow so you can then have a goal. So a lot of people say, I only have $10,000, but they don't even know how much they can borrow. So it's about steps. So you find out how much you can borrow. And then I go, okay, let's go and buy something for $750. How much do you need to save to get $750? You need a goal. Otherwise you're just saving for the sake of saving. You never can get there. It's discouraging. And it's not something that you want to do to get, but it's so rewarding the minute you buy your property. Like we've been learning, everyone that made the sacrifice and bought a property is, obviously it's appreciating in value. They're obviously happy. The market's hot and they're making money. So I suppose is start early, even if you don't think you have enough savings, just, go and see someone, have a conversation, put a budget.
But predominantly you're working with sort of 20 to 25.
Yeah, if you look at it, it's about 25 to, I would say, 55. And sometimes we even have people older than that wants to.
However, if I put your number and email address on the bottom of this, which I will, you're encouraging anyone that's left school to basically reach out and email you and say, what do I need to do?
I agree. I definitely encourage, because I'll give you an example. I had someone, he was 19 and he had some money in Bitcoin, and he made some good money and he managed to save a nice deposit. So that empowered him to go, okay, I have a job, I'm working, I have this much in savings. Can I get on the market, in the market? And we could. He bought an apartment around the Hornsby area, and he's happy. So regardless of the age, he's really obviously getting ready to, to make that decision.
That leads me to my very last question.
Okay.
So going to the other scale of things, let's just say any of our homeowners, vendors out there that have a lot of equity, especially in the last 2 years, their equity may have just jumped sort of 500,000. Especially on the northern beaches, or maybe $1 million has just gone up. How easy or difficult is it for someone that's a homeowner to pull out equity to buy a rental or to buy an investment property or to buy something for their child?
In terms of the institutions, some banks are quite restrictive in terms of releasing equity. So my point I was trying to make is, let's say you're with bank XYZ and you go to your lender and say, hey, I want to take $300,000, and they say, what are you going to do with it? And you're like, oh, maybe I'm going to buy a house, maybe I'm going to put in shares. They're going to like, no, I'm not going to give you that. You actually give me exactly what you're going to do so I can release that equity. When other lenders are a little bit more flexible, so you can go to them and say, hey, I need 300 grand. I don't know where I'm going to buy. I just want to have it ready because it's a hot market and I want to have my deposit, or I want to put it into shares. So there's a lot of people trying to build wealth that way as well, because let's face it, right now, there's not much you can do with your cash. You either earn, 1%, pay tax on it, or you put it into shares, you put it into property.
Okay. So I hear two things there. Maybe one of the stricter lenders that they may be with will want specifically to know where that's going. If I want to say buy 123 Banana Lane, could I go to that strict lender and say, I want to buy 123 Banana Lane, and that one would say yes?
You could, provided that you also, you borrow the equity, which is your deposit, but you also have to get pre-approved for the second part of it.
Right, which you need to be working, because if I was retired that was sitting on a nest egg, I wouldn't be able to pull the equity out because I can't supply them proof that we can pay off the second mortgage, correct?
That's correct, yes.
Okay, even if that was bringing in a rental?
Even if it's bringing in a rental. So in that situation, you would need the rent to cover the whole mortgage, which it's not as simple and it doesn't work like that.
Right. And secondly, what I'm hearing on the workaround, because it's one of my favorite things, where's a workaround here? If you do have one of those strict, inflexible mortgage or lenders, would it be an advice for you to take that mortgage and refinance with another bank and then start that process?
Absolutely. You refinance, get a better rate. A lot of times you're getting a better rate and the flexibility of releasing the equity with no restrictions. As long as you can service that and it sits within your budget. Sorry, I always have to do the disclaimer. You could do that. So that's a possibility as well.
That is perfect. You've answered all of our questions. I can't wait to see you in person. Thanks, Fabio.
No worries. Thank you so much. Have a great day.
If you'd like to know more or would like to do a deeper dive into some more details, give me a call or text 0422 186972.